This is the Global Wealth Show with Grant Connis and Andrew Costa.
At a young age, people very close to me were really hurt by the financial markets, and that drove me to be in this industry.
The vision was to change the industry.
Everybody calls this your nest egg, and I think of it as so much more than that. This is your life savings.
So being that guide, that coach for our clients is why we do what we do.
What we do could change someone's life.
The Global Wealth Show begins now.
Welcome to the Global Wealth Show. I'm Ben Bauman. Today you'll learn cutting-edge financial strategies and tips on generating income for life. Joining me are South Florida's premier financial advisors, Grant Connis and Andrew Costa of Global Wealth Management. You've heard Grant and Andrew on the radio, you've seen them on TV and in magazines. They've also helped train hundreds of financial advisors all across the country. And now they're here to help you plan the retirement you want. Today, Grant and Andrew will be discussing how to never outlive your money in retirement, what you don't know about your 401k but should, and how to survive market volatility. Plus, they'll take some time to answer your questions. Grant, Andrew, welcome.
Hey Ben, thanks. Great to be here with you today.
Thanks, Ben.
Let's talk about that first item on the list, outliving your money in retirement. Is that what people are most concerned about?
It is. You know, for those we always say that are planning for retirement, it's always, have I saved enough? Am I going to be okay when I get to retirement? But those that are in retirement, the number one fear is making sure that their money lasts as long as they do, that they never run out of money. And through proper planning, we call it our retirement roadmap review plans that we prepare for clients, we can show ways where you can transition from that accumulation phase and planning for retirement into a successful retirement. And make sure, obviously, that you never run out of money as long as you live.
So it's not good enough maybe always just to put as much money in that nest egg as you can and then slowly take it out. That's maybe a retirement plan, but not really, right?
Well, yeah, I mean, if you're doing that, that's good that you're saving, right? But I think what happens is you do that your whole life. You save as much as you can, and you know the bills are being paid by your income that you're generating from your work, and then all of a sudden you get to this place called retirement, and you go, well, how am I going to pay the bills now? You know, how am I going to use this money that I've saved to actually generate income? And so it's just it's hard to visualize for a lot of people, and that brings about this question of, could I possibly run out of money? And through that retirement roadmap review, like Grant talked about, we're able to allow you to visualize it and see that, yeah, I'm going to be okay, or maybe I'm not. Maybe I need to do a few things before I get there in order to make sure I'm at a good place.
That's why it's good to take a look maybe 10, at least 5 years out from when you're planning to retire to make sure you're on the right track. But you also need that plan in place. And it's more than maybe just accumulating money. There's a lot more that goes into this roadmap that you've talked about.
Absolutely, Ben. You know, there's an interesting statistic out there that says that 100% of financial advisors in this industry specialize in investment planning, finding the best stock, the best mutual fund.
That's everybody.
The best annuity, yeah, absolutely. Less than 6% of them, however, specialize in what we call advanced planning, which is not only investment planning, but it's also income planning, making sure your income's going to last for the rest of your life. Tax planning, making sure you're as tax efficient as possible. Healthcare planning, taking care of needs like Medicare, long-term care. And then legacy planning, making sure that your assets pass as efficiently as possible to your loved ones. And that's what we do here at Global Wealth Management. We specialize in what we call advanced planning, comprehensive income planning, and making sure that all of these items together are combined as part of the plan to transition you from where you are today to the rest of your life, and to make sure that you obviously never run out of money.
Mm-hmm. And it's behooves someone like myself to check it early and not wait until maybe I'm already in retirement and then try to put together a plan. I may be a little bit disappointed if I'm 10 years away from retirement and I have some work to do, but it's better to find out then than wait too long, right?
Right. We always say it never hurts to get that second opinion. And we actually had someone come in a couple weeks ago for that exact retirement roadmap review process, and Howard and Wendy were their names, and they came in and they said, you know what, we're retiring, we're teachers, we have a pension coming in, we'll have Social Security, of course, coming in, and we're just not sure. We've saved money throughout the years, but we're not sure if we actually have enough to support our additional income needs. And so we went through that retirement roadmap review process, and we basically plugged in to all the different buckets of money. Here's a certain amount that'll go into dividend stocks or dividend investments. Maybe a certain amount over here is for legacy planning and tax efficient income. And then they were able to realize, wow, we actually have an extra amount that we can use for vacations or for their loved ones and doing things like that. So it was neat for them to visualize that, and it was really neat for them to see, wow, once I went through this retirement roadmap review, I can see now that I am okay, and as long as I follow it.
That had to be great news to them, and I'm sure it's always a fun time for you guys to be able to show somebody that as well. But we're all living longer. That's a statistical fact. And so it makes more sense for us to take a look sooner rather than later and get that plan in place. And that's where your team comes in.
Absolutely. We always say, the best time to do that is within 5 to 10 years out from retirement. That's the time we need to sit down with an advisor who is well versed in retirement income planning, not just growing your investments, but literally taking you from that accumulation phase of your life and transition you into that capital preservation and income phase. And I'd say it's probably one of the most gratifying things that we do here at Global Wealth Management is help clients get from where they are today and build out an income plan so they can visualize what their income's going to look like for the rest of their life.
Yeah, that's great information, guys. Thanks so much. We're not done yet. Coming up next, we'll be discussing what you need to know about your 401k. Then later on, how to survive market volatility. First, though, here's how you can contact Grant or Andrew or any member of their team at Global Wealth Management to take advantage of exactly what we've been talking about. We'll be right back.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a major correction? Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management.
It's one of the most important things that you can do for yourself and for your family.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives. Plus, we will stress test your portfolio and do a risk assessment of your current retirement accounts.
It's about planning for your future. It's about planning for your dreams.
Call Global Wealth Management now to get started on your retirement roadmap review. And if you're one of the first 10 qualified callers, you'll receive the top 10 things to consider when preparing for retirement guide. Call now. You're watching The Global Wealth Show with Grant Connis and Andrew Costa.
And welcome back to the Global Wealth Show. I'm here with Grant Connis and Andrew Costa from Global Wealth Management right here in South Florida. Grant, when it comes to retirement, we seem to focus on the 401k, and it's not hard to see why. Almost everybody has one, right?
Absolutely, Ben. 401ks are a great retirement savings vehicle. It allows you to contribute on a tax-deferred basis. Your investments grow tax-deferred. You also get some really good tax benefits by contributing to your 401k. The other thing about 401ks is you get what's called a match oftentimes with your employer. So as you contribute money, they're contributing money into that plan as well. And we call that free money. So if you have a 401k through your employer, through work, we definitely encourage you to take advantage of that because that is free money that is going towards your retirement.
And who doesn't like free money? All right, what should we know about our 401ks that maybe not everybody does?
Well, I think, Ben, what a lot of people don't realize is what's inside of my 401k. What's inside of that is almost always mutual funds. And mutual funds are great. You can grow your money and the 401k is great and the match is great, but what also is with mutual funds is they have two sets of fees. They have a disclosed fee that we could all look up and figure out, and then they have what's called an undisclosed fee, which we have no way of really understanding what that is, other than this cost analysis that we'll talk about. But this undisclosed fee can often cost 2 to 3 times what you really think you're paying. So you think you're paying 1%, and then, oh, by the way, it's 3-4% per year. That can really add up. If you have a couple $100,000 or $500,000 in your 401k, you're talking about over $100,000 over the next 10 years that just gets eaten up in fees. Wow. And here's the thing is that it's not just when the market's up. even if the market's flat or down, this extra 2, 3, 4% is being chewed away from your account. So you maybe have a year where you're up 2 or 3% in the market, and then you look at your balance and you're down 1 or 2%. So it really can eat away on not only at your growth in retirement, but also your income that you get when you're retired.
Yeah, so the average investor can't readily see all this. Let's talk about this analysis that your team can do.
Yeah, we call it our cost analysis or our fee analysis, and it's part of our retirement roadmap review. And what it allows us to do is it allows us to depict not only the disclosed fees that are inside someone's 401k, but more importantly, these undisclosed fees, these hidden costs that are permitted to fly under the radar. And there isn't a day that goes by where we don't sit down with individuals that think they're paying maybe 1%, or maybe they don't think they're paying anything inside their 401k. And it turns out they're paying 2, 3, 4% a year in fees. And what that means is they have to take a lot more risk with their accounts just to overcome the fee structure. So the more money that you can save and put in your pocket than that of the mutual fund company's pocket or the 401k company's pocket, you typically win. And the other thing, Ben, is those fees, as Andrew mentioned, they're not just there during good times, right? They're there in flat markets and down markets. They're always there. So the more you can control that and understand what you're really paying, you can come out far ahead in the end.
Okay, very good to know. Tell me, Andrew, if you've ever heard this. I left a job 10 years ago, just left my 401k there. That's fine, isn't it?
Hear it all the time, Ben.
Oh, yeah?
I actually just sat down with Janet a couple weeks back, and that was her exact issue, is that she had been with 3 or 4 different companies. She had 3 or 4 different 401k accounts that she had left back in those 401ks, and it causes a couple of problems. Number one, of course, is the fees that we talked about. But also, there's no cohesive plan. So in Janet's situation, she ended up having a lot of the same mutual funds and investments in her different 401ks. And it caused a lot of risk issues because all of a sudden she was overweight in certain sectors of the market and things like that. And so we talked to Janet, we said, you know, maybe what we do is we roll these over into an IRA. See, when you leave your employer, you have the ability to not just leave your 401k back, you can move it into an IRA. And it's there's no tax issues. It's tax-free, and what it does is it allows you to have all of the investment options open to you that are in the investment world. And so you can start to work on lowering those costs down and start to work on putting that plan together that's cohesive and all-encompassing. So that's what we talked with Janet about. She was really able to benefit from that.
Yeah. Can you ever do one of these rollovers that he's talking about while you're still working for the same company that you're contributing into a 401k?
Yeah, actually you can, Ben. And if you're 59 and a half years of age or older and you're still working for your current company, you have the ability to execute what's called an in-service withdrawal or in-service rollover. And what it allows you to do is it allows you to roll over that 401k while you're still working at the company into an IRA, an individual retirement plan. By doing that, it gives you a couple different things. It gives you access to the investment universe. So instead of just being inside those mutual funds, you can now own many different other types of investments that might be more appropriate for your retirement planning. The other thing it does is it allows you oftentimes to lower your cost structure. So instead of paying that 2, 3, 4% a year in fees that you might have in your 401k, you can get a much more favorable cost structure, sometimes 1% or less. The other thing that I think there's a misunderstanding around is you're allowed this in-service rollover that gives you that flexibility option, that lower cost structure, but you can still contribute to your 401k. You're not leaving the 401k. So if you're still working for the company, you can take advantage of that free money, those contributions that your company is providing inside your 401k. So it's a great thing if you're able to take advantage of it.
Yeah, good options. Thanks, guys, so much for the info. Coming up, Grant is going to show us a strategy for surviving market volatility. This is must-see information. You don't want to miss it. Stay with us.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a major correction? Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management.
It's one of the most important things that you can do for yourself and for your family.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives. Plus, we will stress test your portfolio and do a risk assessment of your current retirement accounts.
It's about planning for your future. It's about planning for your dreams.
Call Global Wealth Management now to get started on your retirement roadmap review. And if you're one of the first 10 qualified callers, you'll receive the top 10 things to consider when preparing for retirement guide. Call now. You're watching The Global Wealth Show with Grant Connis and Andrew Costa.
Welcome back to the Global Wealth Show with Global Wealth Management. Grant and Andrew and their team at Global Wealth Management have been helping people here in South Florida get to, and more importantly, through retirement for years here. And now they're here on the air to help you with your questions. It's time now for the Global Perspective. That's where Grant is going to walk us through a few strategies to try to help us deal with market volatility. Grant?
You know, most of the clients and the families that we work with, they don't have the time, expertise, or interest in studying the alphas and betas of stocks every day. They just want a solid game plan to make sure that they have all of their bases covered as it relates to retirement. And so what we've done over the years is we've developed a strategy called the 3 worlds of money. It's a very easy way to understand where your money's invested, what it's doing for you, and it gives you a lot more confidence and clarity to your plan to make sure that you do have all those bases covered. See, every investment in the investment universe fits within what we call the 3 worlds of money. We have the market world of money, the protection world, and the steady income world. What's in the market world of money? That's going to be your stocks, bonds, mutual funds, variable annuities, ETFs. Anything that trades with the stock and bond market is going to be in the market world of money. Down here we have the protection world, and we divide that into 2. We have principal protection and we have income protection. Principal protection is going to be your bank accounts, money markets, CDs, government bonds, fixed annuities, investments in which you cannot lose your principal. You can't make a whole lot of money, but you can't lose anything. Over here we have the income protection world. Income protection are investments that whether you live till you're 90 or 120 years old, that you'll never run out of money. So a hybrid annuity with an income benefit, personalized pensions, longevity insurance, things of that nature might fit over here. And then over here we have what's called steady income. And steady income are investments that generate a steady income stream, but they're not correlated to the stock and bond market. So for example, we have a company that puts together portfolios of Walgreens and CVS type properties, real estate for our clients. And if you think about a Walgreens on the corner, right? That Walgreens, it doesn't matter what the Dow Jones or the S&P 500 did today. As long as that Walgreens is in business and they're paying their rent, they're adding value. So we typically like to have a portion of the portfolio into a steady income type investment. Now that's where every investment is housed. Now with every investment, you want these 3 attributes. You want safety, you want liquidity, and you want growth in income. The problem is you can only have 2 of those 3 attributes in each world of money. So for example, if you think about a stock over here, a stock's going to give you growth and income potential, and you can sell your stock whenever you want. You have liquidity, but stocks are not that safe of an investment in general. Over here, if you think about a CD down here in the protection world, a CD is going to give you safety from the stock market. You can get at your CD if you need to. You have liquidity, but you're not going to have a whole lot of growth and income out of your CDs today. And then if you think about that Walgreens on the corner up here in the steady income section, that's going to give you safety from the stock market, growth and income potential, but you cannot just hit a button and sell that Walgreens, so you're going to give up a little bit of liquidity in order to own that asset class. So when we're designing plans for clients and allocations to protect their assets, what we want to do is kind of find that sweet spot right there in the middle to make sure that they have safety, liquidity, and growth and income using the 3 worlds of money. The problem is we sit down with a lot of people that go through our retirement roadmap review, and what we find out is they own a portfolio exclusively of stocks and bonds, and they think they're getting great diversification from these stocks and bonds. And if I had to draw stocks and bonds on this map here, it might be somewhere down here. The goal is to get that back to the middle and make sure you have all your bases covered. And conventional wisdom has always been, the closer you get to retirement, the more bonds you're going to have in your portfolio because they seek bonds for safety. Well, we're in a different market now. Over the last 30 years, you can make money in bonds. Now, with interest rates going up, there's a lot of risk around bonds that people don't really think about. So having a properly structured strategy like this and using the 3 worlds of money can be excellent for when the next market turns 30 or 40% or whatever that swing might be, making sure that you have all your bases covered. And this right here is the 3 worlds of money.
We're not done yet. Coming up, Grant and Andrew will be here to answer some of your specific questions. Stay with us.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a major correction? Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management.
It's one of the most important things that you can do for yourself and for your family.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives. Plus, we will stress test your portfolio and do a risk assessment of your current retirement accounts.
It's about planning for your future. It's about planning for your dreams.
Call Global Wealth Management now to get started on your retirement roadmap review. And if you're one of the first 10 qualified callers, you'll receive the top 10 things to consider when preparing for retirement guide. Call now. You're watching The Global Wealth Show with Grant Connis and Andrew Costa.
Welcome back to the Global Wealth Show with Global Wealth Management. We're here with Grant Connis and Andrew Costa, and this is the point in the show where they answer your specific questions. I know both of you really enjoy this part, so you ready?
Absolutely.
Okay, let's get started. First question, Brent in Fort Lauderdale says, markets are at an all-time high. How do I protect my nest egg from a big market correction?
Well, that's a great question, Brent. And our firm is focused on conservative income investing and retirement income planning, and it really comes from some of those questions that you're getting there with risk. And when I was 19 years old, my life was kind of turned upside down in a car ride home with my dad. I was getting picked up from college, and I was going to school at the time in Tallahassee, and I went to open up the car door, and immediately I looked inside and I could tell that there was something wrong. My dad was a big guy, successful guy, and carried himself a certain way, and he just looked like someone that I didn't really recognize. And I got into the car and said, what's going on? What's wrong? And being the guy that he was, he didn't really want to talk about it. And a couple hours into the car ride home, I asked him over and over again, and finally he turned to me and he said, Andrew, what's wrong is that your mother and I have lost a big portion of our life savings due to this tech bubble crash of 2000 and 2001. And I remember just sitting there kind of silent in the car and thinking to myself, how do you even do that? And so fast forward, I went back to school, I studied finance, and I ended up right in this same industry that was so hurtful and so harmful to my mother and father. And I remember the first couple of weeks of being in the industry, I thought, I don't even know if this is what I want to do if I ever get into a situation where my clients feel the way that my mother felt that weekend that I was home. So hence the fact that Grant and I have created this firm, and we grew up together here in South Florida, and we wanted to focus on conservative income investing and just don't lose what's taken you 20, 30, 40 years to accumulate. Everybody calls it a nest egg, and it's so much more than that. It's the happy times, it's the sad times, it's raising families, it's all that stuff. So just don't lose that.
And it's like, Andrew's parents, we run into this all the time, and there was a couple, Bob and Sandy, who were in their mid-60s. They had recently retired from New Jersey. They came into the office last week, and they had saved about $1 million of investable assets. And their dream was to move to South Florida, buy a condo on the beach, and that $1 million plus their Social Security, that was going to last them for the rest of their life. And they said, you know what, guys, we want to just make sure that we did this right, make sure we're not taking on too much risk. We can't afford to go backwards.
Sure.
And so they came into the office, and we have a financial planning department, and we ran a stress test or a risk analysis on their portfolio. It's step one of our retirement roadmap review. And so we had our financial planners put in all their stocks, bonds, mutual funds. They owned a variable annuity, and it generated what we call this good number, bad number bell curve. And their good number was they had the ability to make something like 42% on their money if we went through a great year in the market.
Okay.
And though we love to see that, what we wanted to focus in on was their bad number, their downside number. And the way they sat that day, they ran the risk of losing about 35% or $350,000 of their life savings if we went through another 2008 type scenario. And mind you, here's a couple in their mid-60s, recently retired, had no plans to go back to work, but they might as well have been invested like they were 25 or 30 years old. They didn't make that shift from that accumulation phase into the capital preservation and income phase of where they are now. And the good thing was they caught it at the right time. And we were able to kind of get them more in line with the way that they wanted it to be. And just because everybody lost, 40% in 2008, that doesn't make it acceptable.
Right.
If you're someone that can't stomach more than a 5% or 10% or maybe even 0% downturn with your portfolio, you can set it up to do that. It doesn't need to be the way that everybody else does it. And so in Bob and Sandy's case, we were able to get them in line. I think they were something like a 5 or 10% downside, meaning they didn't want to lose more than 5 or 10% or they wouldn't be comfortable. And then we were able to build a plan around that, and then they could visualize what that successful retirement would be going forward. So it all starts with that stress test, and what we say is understanding and defining the amount of risk that you're taking in your portfolio.
Wow, those are great stories, guys. Thanks so much for that. Another question, this one from Jennifer in Weston, who says, I hear a lot of talk about annuities. Most of it sounds like they're a bad thing. Is that true?
Well, annuities can be a good thing. They're not bad in all cases, but they're not right for everybody. It's just like a stock or a mutual fund. They're not all good, but they're not all bad either. So I think the main reason around annuities, in my opinion, on why people are attracted to them is twofold. Number one, a lot of people don't want anything to do with the stock market, and a properly structured annuity can protect that. It can give you some upside of the market, but with no downside risk. The other reason I think people flock to annuities is the fact that it's the only investment in the investment universe that whether you live till you're 90 or 120 years old, that you can never run out of money. There's no other investment that provides that. So I think there's been a flock to safety due to the fact you can't lose money, but it can also provide you that guaranteed pension-like income that you might not have in any other sources of income.
Okay, yeah, great. Guys, thanks so much for that. That's all the time we have this week, but remember, if you have a question, visit the website, askglobalwealth.com. We might just tackle your question on the air. Remember, you can get a hold of Grant, Andrew, or any member of the team at Global Wealth Management at any time to begin securing your financial future. You've heard all the information. Be proactive. Call now. Why wait? We hope you enjoyed the show. Please join us next time. For Andrew Costa and Grant Connis, I'm Ben Bauman, hoping you have a great day and a secure financial future. So long.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a major correction?
Whether you're in retirement or nearing retirement, now is the time to secure your financial future.
Is your nest egg ready to help you meet your retirement goals for the rest of your life?
At Global Wealth Management, we want you to succeed.
Global Wealth Management is a South Florida investment management firm that specializes in capital preservation, income investment, and estate planning strategies for those planning for or living in retirement. Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management.
It's one of the most important things that you can do for yourself and for your family.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives. Plus, we will stress test your portfolio and do a risk assessment of your current retirement accounts.
We believe that planning for retirement should be taken very seriously.
Call Global Wealth Management now to get started on your retirement roadmap review. And if you're one of the first 10 qualified callers, you'll receive the top 10 things to consider when preparing for retirement guide. Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management. Call Global Wealth Management now